Welcome back to the deep dive. Today we're looking at something really interesting, a kind of financial paradox, you could say, happening in India. We're tracking this huge leap they're making into the digital currency future. But to really get it, you also have to look back at something much older. I'm talking about gold, thousands and thousands of tons of physical gold. So our mission today is to unpack the launch of India's own digital currency, the e-rupee, or euro. We want to explore how this isn't just, faster payments tech. It's framed as a national economic security project, really about digital self-reliance. And then, how does this connect back to this massive, almost unbelievable amount of gold held by ordinary Indian households?
That connection is absolutely crucial. Our sources are showing this is a big strategic move. The Reserve Bank of India, the RBI, they've put their full guarantee behind the euro. It's backed just like paper money. And they've already kicked off the offline launch with the big players SBI, ICICI, HDFC. What we're really seeing here is, well, an attempt to really get a firm grip on the country's money supply going forward.
Okay, let's get into that because, for a lot of people, maybe listening right now, they might think, hang on. India already has UPI, the Unified Payments Interface. It's everywhere. It works. People use it for everything. Super popular. So if I'm already paying for my tea with UPI, why is this digital rupee suddenly a revolution? Why isn't it just like UPI 2.0?
That's a great question, and it really hits the core difference in how it works. And that's key to understanding the strategy. See, the digital rupee, it's what they call a central bank digital currency, a CBDC. It's issued directly by the RBI itself. Think of it like a digital version of a banknote. Now think about UPI. When, say, Mukesh sends 100 rupees to Sudhir using UPI, that transaction still needs a bank in the middle. The money moves from Mukesh's bank account through the system to Sudhir's bank account. It might be fast, but the banks are still there. With the digital rupee, that intermediary bank is just gone, removed. It's a direct transfer, a direct liability of the RBI moving from your digital wallet straight to mine.
Oh, okay. So it really functions like actual peer-to-peer digital cash. But it's got the government, the central bank, standing right behind it, guaranteeing it. So what does cutting out the bank actually do for the system as a whole? What's the benefit of that real-time settlement?
Well, it brings speed, definite speed, certainty, and resilience for the whole system. Because you've taken out that middle step, you remove the friction points. The sources we looked at really emphasize this. Faster final settlement, almost no payment failures, which can be a headache in high-volume systems, and no more pending transactions hanging around. For an economy like India's growing so fast, removing even tiny bits of friction, well, that adds up to huge efficiencies. It's a really fundamental change in the plumbing, so to speak.
And the politicians pushing this, people like Piyush Goyal and Nirmala Sitharaman, they weren't just talking speed, were they? They were tying it to bigger economic goals. I remember hearing about increased transparency in money flows, which must be massive for tracking the economy. And, of course, saving money and resources on printing and moving all that paper cash.
Oh, absolutely. The cost savings on physical currency alone are significant. But the bigger prize is that economic stability and control. The euro is explicitly designed, really engineered, to make sure India controls its own digital economic future. So it boils down to transparency, speed, and ultimately that idea of economic self-reliance.
Okay, this is where it gets really interesting for me, the timing. Why push so hard for this now? Was India just reacting to something happening in the market, or was it more about heading off a potential risk they saw coming?
It was definitely both anticipating and reacting, and the risk was clear. It was the boom, especially after COVID, in foreign cryptocurrencies. Things like Bitcoin, Ethereum. These are assets completely outside any country's control with no national guarantee backing them. From the government's viewpoint, the worry wasn't just, people speculating. It was about capital potentially flowing out, people bypassing local tax rules, and the fundamental risk these completely untethered digital things posed to India's own financial stability and control.
So basically, unregulated crypto started looking like a big, gaping hole in their national financial security fence.
Precisely. And you saw the signal flare go up years back, actually. Think back to that 2024 policy. India slapped that huge 30% tax on crypto gains. Now, that wasn't an outright ban, no, but it sent a very, very clear message. Look, these things are risky, we don't control them, and using them is going to cost you. That was the stick. And the digital rupee, that's the carrot. It's the safe, legal, government-backed alternative they want you to use instead.
Wow, okay. That completely reframes it. This isn't just a tech upgrade for convenience. It's a defensive, strategic countermove.
It is absolutely a project built for sovereign economic control. The sources are explicit about this. The digital rupee is designed to fight those major financial threats that come with unregulated digital assets. We're talking money laundering, terror financing, capital flight, tax evasion, all of it. By launching their own guaranteed traceable digital currency, India makes sure its own money flow, backed by its own central bank, stays secure, transparent, and, well, domestic.
And it's not happening in a vacuum, right? This is part of a global trend. You've got the U.S. looking hard at stablecoins. China's already pushing its digital yuan pretty aggressively, even internationally. So India's e-rupee is its own unique play in this new global game, staking its claim in the digital economy. It's about standing on the world stage.
It is definitely about global standing. And look, this is where we need to connect the dots. We need to bridge from this, high-tech future of finance back to something incredibly traditional, almost ancient in India. Because the digital rupee, powerful as it might be, is only one part of India's economic strength. That whole strategy rests on something else, something incredibly solid.
And that foundation in India is gold. We're shifting from digital code to actual physical metal.
Exactly. For generations, probably millennia, gold in India hasn't just been an investment, not just a commodity. It's fundamentally tied up with ideas of trust and heritage. It's seen as the ultimate safe haven, the ultimate store of value, especially, in a vast country where maybe not everyone always had easy access to formal banks.
Let's talk numbers then, because this is where it just gets staggering. I've got this figure from a Morgan Stanley report.
Yeah.
You really have to let this sink in. Indian households are estimated to hold around 34,600 tons of gold.
34,600 tons. It's an almost unimaginable amount. And if you try to put a value on that, it's somewhere close to 3.8 trillion US dollars. Just under maybe 3,785 billion.
3.8 trillion, just sitting in households. Now, here's the metric that just blew me away, the one that really shows the stability factor. That privately held gold is equal to about 88% of India's entire GDP. 88%. That's this colossal pool of wealth completely outside the banking system, outside the stock market. It's like a huge national shock absorber held by the people themselves.
And compare that to the official holdings. The RBI, the central bank, holds a respectable 880 tons or so. That makes up about 14% of the country's official foreign exchange reserves, which is already pretty strong, globally speaking. Yeah. But if you could somehow bring even a fraction of that household gold onto the national balance sheet, which is admittedly very complicated culturally and politically, India would instantly become the world's largest gold holder, by far, dwarfing everyone else.
It's like a hidden financial superpower tucked away in cupboards and safety deposit boxes.
It really is, and it's not just sitting there inert. This demand has real, immediate global impact. Sources pointed out, as of mid-2025, India was the world's second biggest gold buyer, right after China. And this demand isn't steady, it pulses with the cultural calendar. You see these huge buying spikes around festivals like Dhanteras and Diwali, and analysts track this globally because it literally moves international gold prices. It causes volatility. When India buys gold, the world market feels it.
Okay, so we've got this ancient physical anchor of gold, immense trusted wealth, and then we have this brand new, lightning-fast, centrally controlled digital rupee. So bring it together for us. What does this combination actually mean? How do these two seemingly opposite things work together to make India a stronger player globally?
What it creates is this uniquely strong, multi-layered financial system. It's very resilient because it's got these two pillars. India is essentially hedging its bets. You've got the digital rupee providing the modern tools, security, control, speed, transparency for everyday transactions.